You're watching EAC News. Thanks for joining us. Let's have a look at today's finance. The CSX index is currently 529.5 points, down 1.24 points or 0.23%. The daily exchange rate is 4,046 real to the US dollar. Now let's have a look what else is happening in finance around the world. Global share rise as earnings boost, US dollar hits a 20-year high. The US dollar touched a 2-decade high against rivals on Thursday as Wall Street rallied and European shares rose from a 6-week low and strong earnings reports, offsetting gloomy US economic data. The yen dropped to a 20-year low after Bank of Japan vowed to buy unlimited amounts of 10-year bonds daily to defend its yield target. The bank's strengthening of the commitment to ultra-low interest rates sent the US dollar to a fresh high, weakening emerging markets currencies and pushing borrowing costs for US dollars in currencies derivatives markets sharply higher. Oil prices settled higher on an increased likelihood that Germany will join another European Union member states in an embargo on Russian oil, which could further tighten supplies in an already stressed global crude market. The SP 500 climbed 2.47% to end the session at 4,287.50 points. The Nasdaq gained 3.06% to 12,871.53 points, while the Dow Jones Industrial Average rose 1.85% to 33,916.39 points. Technology stocks gained on strong earnings. Shares of Facebook parent Meta Platforms surged after the company reported larger than expected profit on Wednesday. Apple, the world's most valuable company, and e-commerce giant Amazon both rallied ahead of the quarterly reports, though Amazon tumbled 10% in extended trade after the company forecast current quarter sales below estimates. China tech rallies as Asia shares best day in 6 weeks in tense markets. Asian shares were set for their best day in 6 weeks after Friday, led by Chinese tech stocks after reports of a possible resolution to the Sino-US audit dispute, giving investors much-needed respite from worries of global economic slowdown. Still, a key regional share index was set for the worst month in 9 as the Ukraine war and expectations for aggressive US rate hikes in coming months have added to the anxieties, propelling the safe haven dollar to nearly 20-year peaks. Hong Kong-listed tech stocks rose as much as 10% on Friday, trading resumed after lunchtime pause. Economic players JD.com and Alibaba each rose as much as 15% and Meituan gained to 12%. All three are listed in both US and Hong Kong browsers. They are their peers' stock prices had been affected by the US moves to delist Chinese companies because Beijing restricted the US audit regulators access to their audit documents. Reports on Friday that a resolution to dispute what was in sight had given the sharp gains, said Stephen Lung, Executive Director of Institutional Sales at brokerage UOB, Keihan, Hong Kong. The gains from Chinese index heavyweights sent MSCI's broadcast index of Asian Pacific shares outside Japan 1.9% higher, which would be the best day since March 17. Also helping was the positive upload to the top decision marketing body of Chinese Communist Party, saying China will set up a policy support to subsidize the economy, and strong Wall Street after robust earnings from Facebook parent Meta Platforms had given Nasdaq a 3% higher overnight. Wall Street ended sharply higher on Thursday after a strong quarterly report by Meta Platforms lifted beaten down technology and growth stocks and offset worries about the US economy's construction in the first quarter. The Facebook parent surged 17.6% after social network reported larger than expected profit and rebound from a drop in users. Communication services and technology were among the strongest in 11 SP 500 sector indexes, jumping 4.04% and 3.89% respectively. Apple, the world's most valuable company, and e-commerce giant Amazon both rallied more than 4% ahead of quarter reports later in the day. In extended trade, Amazon tumbled 10% after company forecast current quarter sales below. Wall Street estimates investments have been dumping high-growth stocks for weeks due to worries of inflation, rising interest rates, and potential economic slowdown. Even with Thursday's strong gain, the tech-heavy Nasdaq was down almost 10% in the month of April, on track for its deepest one-month decline since March 2020. The SP 500 has gained or lost 2% or more in a day, sometimes 32 so far in 2022 compared to 24 such days in 2021. The US economy unexpectedly contracted in the first quarter as COVID-19 cases surge again and government pandemic relief money is dropped. That's all the latest in finance. Tune in Monday for more details.